Oh man, so a painful last couple of days for Luna. Down dramatically over the last couple of days as the UST, that's the algorithmically backed stablecoin, depegged against the US dollar, leading to a bunch of UST flowing out of protocols, people selling their Luna, and this leading to Luna crashing as low as $24. What is the state of the market? We're getting a little bit of a rebound today here on the day. Bitcoin up 5%, sitting at 31,600. We've got Luna recovering a little bit, sitting at $32. What's in store for the market? What's in store for Luna over today in the next couple of days? We're going to go through that and a bunch more. Don't forget to hit up the like button. Don't forget to subscribe. As always, if you'd like my perspectives, consider joining our course member live streams, ijaz.uk/member, to help you navigate through these tricky times. And as you can see here, this is a horrible time for a great project. And this just reminded us all that no project is safe in this market, right? No project is safe in crypto, full stop. So when I'm banging the drum about having a diversified portfolio, oh, how boring I sound, right? Because it's so much more exciting on Twitter when somebody says, I'm all in on Luna, I'm all in on Phantom, I'm all in on Solana. So exciting, right? Because it makes you think that they're super duper gangster, superhuman. Well, how did that work out, right? Whether you're in Solana and you get timeout issues, and you're Luna and you get depegging issues, you can be in Phantom and you can have certain issues around the Deuce finance hack, which got misinterpreted as a Phantom issue. You get fears about a whale wallet getting liquidated. These things happen with any single project. If you're just holding Bitcoin and you're Bitcoin maximalist, then you get fears about, oh, is there going to be a margin call for Michael Saylor and MicroStrategy, right? There's fears everywhere, and there's things which can bring any project down. And granted, the whole equity market's down. These blue chip companies which we admire, Microsoft, Apple, Facebook, they're all getting decimated because the market is not happy. We've covered that off extensively over the last couple of days. But the reason we're getting a little bit of a slight rebound today is that stock futures are indeed slightly higher this morning. Now, that doesn't mean it's going to stay that way. We've still got another hour and a half before the markets open up. But the pre-market is indicating a little bit of a relief rally. And that's what we need to understand is this just a calling off before the bears continue to push us again to the downside? Because that's all we have here is this little day to day which has wicked higher. Is this a proper bounce from 30,000, and is this the start of us securing new levels, or are we just going to continue to the downside? We've created our lower low from the bottom of the wedge. We broke through 32,614, our yellow level here. Can we get back and secure that level, or are we going to break to the downside? That's what we need to watch out for. You can see here 4-hourly candles are bouncing really strongly off 30,000, but the market is not done, right? And this is the worrying thing, because if the equities markets come out today and they say we're not done, we're going to continue to sell off, we're going to continue to panic because we've got the CPI reading tomorrow morning and we think it's going to be horrible, then we could see us starting to get back over to this side. Now, let's go take a look at what the CPI expectations are for tomorrow, because the core CPI expectation is 6%, which is when you take out some of the other aspects. But the headline one, the one we're going to be looking out for, is 8.1%. So the market is expecting this to come down slightly from the year-on-year figure of 8.5. Okay, so you're expecting an 8.1 about here. Now, remember, these figures compare year-on-year. So remember, this 8.5 figure is the growth year-on-year versus the same month going back. Okay, so if this was the March reading, this will go back to this 2.6. It grew year on year versus this figure. Now remember, now we're comparing to a big month. Now we're going to be comparing April to April, which is the first one where this one started to get really big at 4.2. So it's harder to have a bigger inflationary headline number because the base effect is already larger. Okay, so this is a positive. This could mean that we could get surprised to the upside tomorrow and get a little bit of a rally if we see inflation start to inflect down. And that's what we want to see. At the moment, this is not inflecting down. We want a line coming down towards 8.1, just even a slight one, just to show that even that 0.25% interest rate hike made a difference, because then people are going to be able to extrapolate that and say, okay, the 0.5, which was announced on March earlier on 5-6 days ago, will have an even more profound effect. We've got control of inflation. That's going to be important tomorrow. Now, what's going on? Back to Luna. Let's carry on with what's going on, because we had an interesting tweet thread by the CEO of Avalanche. Okay, so this is the founder and CEO, Amin, of Avalanche. Would love to get him on the channel, but I don't think he would fancy that. So he goes, even fully collateralized fiat stablecoins have depegged. Even some of the weak algo stablecoins have recovered. Some thoughts. I've always said that algo stablecoins are subject to destabilizing bank runs. The only mechanism that can defend against this is a strong, active team that performs open market operations. My thoughts and takeaways. We need a decentralized stablecoin, okay? So we think most people in the crypto space kind of agree with that, right? We can't just have these centralized US Tether. We can't have just USDC. We know that there are native implications and risks involved with having those. We've covered those off before on the channel. Fiat-backed stables are subject to legal seizure and capture. Yes, that's true as well. You kind of undoing the purpose of crypto, right? What's the point if everything's in a centralized stablecoin? A decentralized economy needs a decentralized stablecoin whose banking store cannot be frozen or confiscated. Agree. There isn't room in the market for a dozen or half a dozen or even just 2 algorithmically backed stablecoins. This is a market where the biggest one wins and all others lose. Interesting. Okay, again, interesting. And we know that Avalanche are backers of UST, right? We heard that there was a partnership, and we know that Terra Foundation started to accumulate some Avalanche in their reserves as well, right? Not just Bitcoin. We covered that off in a video. If there'll be a decentralized stablecoin that succeeds, it'll be the one with the biggest value and the most battle-tested team. True? Agree. Let that sink in. It's not a game where Johnny come lately has a chance. But what he's saying is you need a team that has been through it. They've been hacked. They've been attacked. They've got the reserves. They've got the battle scars. They've got the wounds. That is going to be the algorithmically backed stablecoin that wins this battle. Hope you can all see why you should not touch copycat algo stables issued by purely technical teams. If the team's claim to fame is that they were once interns at Google, they are not going to make it. The team that has the best open market operations is the only one that can pull it off. For various regulatory reasons, there's no way a US-based team can succeed at an algo stable. Pretty much only a Korean, Singaporean, or Swiss team has the right regulatory environment. All others are ticking time bomb. Okay, interesting. Now, I'd argue if you're basing this based on regulation, saying all other coins are going to face struggle for regulatory reasons, then regulation can change, right? So even with Korea, Singapore, and Swiss, maybe they go through years of a favorable environment, and then regulation changes for the algo-backed coin there. So really, I think the algorithmically backed stable coin that will win is one that is beyond regulation, right? The one that is can work in any jurisdiction, in any regulation. So that's going to be important there. For the algorithmically side of the stablecoin to work, the underlying chain has to offer high capacity and resilience under load. Few chains have the right mempool, fee, and API infrastructure to handle high loads. True. The space is incredibly resilient. We just weathered a substantial bank run. Had this happened in TradeFi, there would have been talk of doom and bailouts galore. One thing we know, the Banks' bonus would still be paid. That's very true. And he's kind of having to dig back to the financial crises where we know there were bank runs on many famous banks, whether in the UK where I'm sat, whether in the US, famous collapse of Lehman Brothers, but the majority of banks were too big to fail. Right? They were too big to fail, and who came to bail them out? You and I, taxpayers, the government, right? Why are we not bailing out our UST, our algorithmically backed stablecoin, which is decentralized, which is actually giving us a hope at a future? No, because these funds have to do it themselves. And credit to the likes of Kwon and these people on this noble mission to try and build an algorithmically backed stablecoin. It is very difficult. And anybody who says, oh, he's just doing it for the money, these guys are super wealthy, and they could be wealthy in the easier segment of Web3 and crypto. They don't have to pick to go after the biggest challenge in the crypto space, which is building a successful algorithmically backed stablecoin. We're going to come back on to how that, they're kind of primed for coordinated attacks. The bounce back is a great arbitrage opportunity. The dynamic that gives rise to a bank run executes in reverse on the way back. More complex stablecoins designs seem unlikely to be more stable under a bank run. The simpler mechanism, the easier it is to understand. Fine, so you can finish this off at the end, but what I want to do is cover off his overall. Overall, the UST depegging played out exactly as we saw in past historical cases. I'm even more bearish on all copycats and bullish on UST once the dust settles down. So there you go, guys. Nice defense from Emin to protect his friend Kwon, but I think a lot of it is factually correct, and I kind of agree with a lot of his points there. Now, I do want to cover off some of the opportunities that he was speaking about. So if you're looking for an opportunity, the obvious one is, okay, if Kwon can fix this and the peg restores, then Luna's going to start improving, right? Because if people are buying more UST to bring it back to its peg, that's going to lead to more Luna being burnt, reduction of supply, and this should start climbing back to its normal levels. Okay, that's the most obvious one. The second most obvious one is this one, which is, okay, what if I buy UST? And some people did start doing that, right? If you started buying UST at some of the lows, I mean, if you were buying here, for example, when the DPEG fell as low as it did at 61, then you're getting a 39, 40% return, right? If you buy it now even, you're getting a 9% return if this restores to peg. Now you've got to weigh this up. I'm personally not buying UST at this point. I mean, that 9% for me, or even what it was even at earlier levels where it could have been even 20%, is not worth the risk to the downside to get that 9% to the upside. So for me, I wouldn't be buying any UST. I have nibbled a little bit on Luna, not gone crazy. I just nibbled it because it was an interesting price point. I thought I'd buy some more. I didn't panic sell anything. You guys know me by now. I don't do panic selling. I hold. I have diamond hands, diamond encrusted hands. I didn't sell any of my Luna and held it. And that's why you need to have smart portfolio allocations. I can't say I would have had these same diamond hands if 90% of my portfolio was in Luna, right? That's why it's really important that you hold sensible allocations in your portfolio. If any of your projects grow to a bigger part of your portfolio than you desired, you trim. Right? You trim. And that's all. That's my profit taking strategy, right? You trim to make sure you bring it down. And it's difficult. Trimming is difficult because obviously by definition, you have conviction in the project. You don't want to trim it, but you have to be disciplined. Trim it. Go put that money into Bitcoin, some stables, and go look for your next opportunity that could do the same thing that coin just did. That's the aim of the game. Now, let's keep going. Let's keep looking at some of these other things because now you're getting a bunch of people coming out and saying, we told you so, right? So let's take a look at this. On the other hand, this presents a future risk for the Bitcoin price. This was posted before. If Terra encounters a problem and is forced to sell a lot of Bitcoin to defend its UST peg, it will be detrimental to the price in a way that their current buying is favorable to the price. And this is the important thing, guys. A lot of people are saying this was a coordinated attack. We covered that off yesterday, and arguments are maybe it was. There's some rumors around that it could be certain parties. I don't want to name who it could be. Maybe some hedge funds, maybe some people in the status quo, the fiat-backed system, and it will make sense, right? You imagine this: if you were owners of the existing status quo, the fiat infrastructure, and you've got $13 billion locked in Anchor. Money which normally sits in your bank accounts on the high street getting 0.01%, but now people are going to Anchor Protocol and getting 18%, 90%, 20%. Are you not going to be annoyed? Are you not going to do something to protect your establishment? That's why, you can argue that there are these coordinated attacks and you are open to this. And Do Kwon knows this. He's not a stupid guy. He knows this. Why do you think he was building out this Bitcoin reserve? He knew that these types of attacks are more and more likely, the more and more popular the Terra, Luna, and Anchor ecosystem gets, right? But he was just a little bit slow. Or you could say the attack was really well timed before he could get his Bitcoin reserve up. And then this is what you expect, right? And then if I come back over to here, you've now got withdrawals on Terra network. You can't take your Luna out of Binance, again, to stop some of that pressure to the downward side. And you also had this from Sam Bankman-Fried with an interview from, I can't remember who this was. Shout out to whoever did this interview. But he was asked about what's his views on algorithmically backed stablecoins. And he says, I think they're really cool. I do have some sympathy to the perpetual motion crowd here. They can serve some useful purposes. But if you zoom out right and you say, this is a stablecoin backed by volatile assets, what's going to happen in a big market move, right? Like, how this plays out. So this was his warning around, stable, algorithmically backed stablecoins backed with volatile assets. And this was my concern, right? I mean, when Do Kwon backed with BTC, we thought, okay, at least BTC is the gold standard, but even then, we know it's super volatile compared to some other assets in the world right now. In the future, fine. We expect BTC to be this rock, this anchor, which is not going to move, right? But for now, it is volatile. But then on top of that, do you remember when he then started announcing he's going to put some avalanche in the reserves? I mean, I made a video and completely didn't like that. I didn't like that move at all, because now you're just no different to Tether or USDC, where you're putting your money into cash equivalents, which are far more risky. You need to be able to have reserves which are solid. And this is why we ended up in this mess, because what happened is when it started to depeg, Do Kwon went and started deploying capital. He started taking some of his reserves and deploying it on the open market. But the Bitcoin price is super down. It was close to 30,000 yesterday. Okay, so he was selling his Bitcoin reserves at a discount, which further pushes Bitcoin down, which means he's having to sell at even more of a discount, which is spooking the market even more. Fear and greed index continues to fall, sitting at 10 today. And that continues to shake the environment. It creates more FUD, more uncertainty, more people selling Luna, making things even worse. And it was a spiral, a death spiral loop, which made things very, very difficult. And that's what these people, and Sam Bankman-Fried is a very smart billionaire in the crypto space, founder of FTX. He knows what he's talking about. And coming back on to this point as well, this, we should have known that this was going to be a bit of an issue, right? If anytime there's an issue with the peg, Do Kwon is having to throw his BTC reserves out there, into the market and sell it on the open market in large volumes, it's going to have an effect on the Bitcoin price, because Bitcoin is not super stable right now, right? It's a difficult market with difficult macroeconomic situations, and obviously Bitcoin is going to struggle in that environment as well. Right, lot to cover off, guys. Really crazy times. What do we expect here from Bitcoin? I think it's a tricky one. I won't get my hopes up on a complete recovery just yet. If and until we hear some improvements or some updates on what's going on, we're still in a precarious position, right? If you're sitting here on an hourly chart, you've only just had a bit of a bear flag form, right? You can call this a bear flag, a continuation pattern where it kind of resets the RSI to kind of not be oversold before then falling back down to the downside. So that's what I'm monitoring here. I'm not getting too excited on this Bitcoin bounce. If we can secure 32,614, I'm going to get a little bit more excited because, okay, fine, we've secured our next support level and we can start working our way back up through the levels. But right now, I can't help but be a little bit of a pessimist and expect this kind of pattern to the downside, just a cooling off, a normal bear flag pattern, a reset of the RSI before continuing back down to the downside. So that's what I'm waiting for. If we see lower price points, I still, for some reason, think we're going to go and test 29. If we don't, fantastic, great news. If we do head towards 29, I'll continue to try dollar cost averaging and nibbling on some of my favorite plays. As always, guys, don't forget, keep your portfolios diversified. I can't plead that enough. Luna seemed like such a strong project. It was one of the only projects which was outperforming Bitcoin all of this year, and just weeks ago is sitting at $100, $119, and it was a great project. And suddenly this is what can happen in crypto, and it's not a fault of any particular person, nobody to blame. You can't blame Kwon, you can't blame anyone. All you can blame is your portfolio allocations, because if you're panic selling, if you're one of those yesterday as Luna kept falling and falling and falling and you're panic selling, it's because you got too much Luna in your portfolio. The reason I was able to hold and not sell any of my Luna yesterday, in fact buy a little bit more, is because I stick to my portfolio allocations. I don't let them get out of hand. Hope you guys enjoyed this video. As always, don't forget to tune in later on, because I will be posting that all anticipated interview with CEO Michael Kong of Phantom. So yes, make sure you stay tuned, hit up the subscribe button, don't forget to like, and as always, I'm going to link up the video to yesterday's Luna video explaining exactly what happened for those who missed it. Thanks for watching, guys. We'll see you in the next one.